here on Opening Fire. We've got the market, which is down, which is up 18, 19 points. So there's a bit of a pickup which has happened. 4 points on the Nifty. Maruti numbers, sales numbers for the month of December are flashing at the bottom of the screen. Total sales have come in at 1.19 lakhs, up 8.5%. I think the expectation was for a growth of about 6.5%. So this is better than what was expected. Exports are down some 33%. And so that's essentially what's coming through from Maruti in December. More details, more granular detail will come soon, so I guess we'll look at that as well. Pankaj Sharma is joining us from our studios here. He's Executive Director and Head of Equities at Equirus Capital Private Limited. Pankaj, thanks very much for being here.
My pleasure.
First of Jan, wish you a very happy 2016 from everyone here. Thank you for dropping by. At Equirus, how are you kind of approaching? Just tell us what, to your mind, are the big dominating themes, drivers for stock markets this year.
So I think, unfortunately, 2016, in my view, would be a very, very similar market to what we have seen in 2015. It would be a stock pickers market. You would not have too many secular themes which are very, very large. So if I look at the large cap space, most of the sectors you would have problems. So let's say, for example, IT is struggling with the growth rate issues. Pharma has regulatory issues. Infrastructure is yet to pick up, and you have seen that impact in some of the large caps like L&T and BHEL. The order inflow is a big issue even now. So there are not too many large themes which we have today. However, there are smaller themes which are emerging. So let's say in sub-sectors and segments like roads, where we have started to see a lot of pickup. And roads is one area where we see that things are going to get better in next 12 months. We have already started to see a lot more activity and a lot of positive intent from the government side. And this was not a very, I would say, in some ways it was a relatively easier problem to fix. Second thing, if you look at, let's say, what has happened in the commodity prices, it is very, very good for the users of gas. So gas availability is going to increase, and that is a big positive for the gas-based plants. Similarly, of course, we have seen the disappointment which was the case in winter session of Parliament around GST. But sooner or later, that would become a reality, and theme around GST beneficiaries would also play out. So there are sub-themes available, but unfortunately not very large-scale themes that you buy this sector and anything in that and it will do well. Unfortunately, I don't think that would be the case in 2016.
If you look at recently, I'm talking about recent performance, you know, the TTK Prestige, the Voltas, that part of the market has done well, I guess, based on the pay commission recommendations.
Right.
I mean, the money, of course, will only be disbursed in the middle of 2016.
Right.
But that is the other theme which I guess highlighted all the time.
Right. So I think, Prashant, I think there is of course, 7th pay commission is going to be a big, is going to provide a big boost to consumption. But there are a couple of differences versus last time around. So like when the last pay commission had come, there was an accumulation of almost 2.5 years of one-time payout. So that helped a lot of auto guys, that helped a lot of these large-scale durable companies. This time around, government has been very, very quick in acting upon the recommendations. Also would happen probably in 6 months' time. So the areas that would be available to people would not be very, very large this time around. That is one. Second, as far as the consumption theme is concerned, a big variable has been the monsoon. So let's say last couple of years when we have seen that the monsoon has not been great, it has impacted the sentiment. Whenever you look at all these price cuts which guys like HUL and PNG keeps announcing and what we have seen in last 12 months, if monsoon is good, definitely 7th pay commission would be a very, very strong headwind for consumption theme. But if again we don't see a great monsoon this year, this could be an issue with like the compensating factor which would come from 7th pay commission would not be large enough to support this sector anymore.
Okay, fair enough. And anyway, I think the central boost is, the central government boost is about 1 lakh crore, right? If you take so from a economy perspective, it's not that large.
Yes.
That it will do anything for the economy.
And also what is available to people, let's say if we look at, again, you rightly pointed out that number 1 lakh crore. If you take the taxes out from it, the net impact is not more than 50 to 60,000 crores, number one. And there are almost 1 crore beneficiary. So which actually means that you are not having more than 50,000 rupees per year of impact, which is not large enough. For 4,000 rupees per month or 4,500 rupees per month is definitely good for if you want to go out for a movie. But if you want to buy a big ticket item, not necessarily.
Yeah.
That is one. Secondly, if you look at the number of pensioners has increased. So the pensioners, I believe they would be more circumspect when they spend that money, and they have seen the experience of inflation in last 5-7 years, which has not been very great. The prices of essential commodities have increased so much, and that impact the pensioner sentiment. So this time around, I think 7th pay commission would not be that great and that big.
Yeah. Yeah, I just want to focus on, so you highlighted roads, gas-based plants and things around GST, but just the gas thing, can you just talk about that a little bit more in detail?
See, I think it was, I'm sure that you are referring to that price renegotiation which has happened.
Not that, but generally the fact that gas hasn't been available, which was, expansion was done, GAIL for example, etc. But the gas never came, right? The KG gas, and a lot of the gas-based plants were lying idle, power plants without gas. So I think now the situation has changed. I mean, I think US gas prices are $2, $2.50. So, and we're talking about getting more gas and moving to a gas-based kind of thing. There's the Qatar thing as well, where the government is saying we'll buy 1 million ton more. So you put all of that together and just talk about that.
Sure. So, of course, the way the outlook is for commodities, I really don't think that we would going to see a significant increase in prices for these commodities like oil and gas. And that's something very, very good for, like, you have seen the impact on India's budget deficit and what we've seen on the general economic trend. That has been very, very helpful. This situation will remain, and specifically when we talk about gas, there are a lot of beneficiaries from that, but primarily it is good for people who have built large capacities in the hope that gas will come, and it didn't come. So it includes everybody in the value chain, whether you talk about the transmission companies, whether you talk about the users like power plants of everybody, Torrent, you have GMR, you have Reliance Power, sorry. So all of them would be a beneficiary of that once it becomes available more and more and at prices which are affordable. So let's say $12, $14, definitely the issue more was with price and nobody would have definitely afforded that. But at these levels, definitely it has become much more affordable, and definitely you are going to see a lot of capacity utilization increase from all of these guys.
Okay, but is there anything that you can look to buy there in terms of stocks?
See, I think two stocks on that theme. One is Torrent Power, which is our one of the top picks also in the space. We think that Torrent Power is going to be a big beneficiary, and we have already started to see the impact of higher gas availability on the plants which they operate. And another thing which I want to highlight about this company is that in last 10-12 years, whenever we have seen problems with private sector power producers, the problem was largely with the strategy of massive expansion and bidding at prices which were definitely not very remunerative for projects. But Torrent has been very, very good in that. They have only expanded when they had clear belief that they can make money in these projects. But unfortunately for them, what happened that the gas was not available for the power plants which they have built. I think that problem is getting better. And whoever has a decent balance sheet today in power sector, I think next couple of years would be a very good time for them. So Torrent Power is one of those.
How is the stock done, by the way, over the last
if you look
5-6 years?
5-6 years, I would, because if you look at this stock, Torrent Power, it has been impacted in last 4 years. But if you look at last 6 months and 12 months, it has done reasonably well. So from around 140 levels to 180 move, which has happened in last few quarters. This is very, very good, and it's on the back of that only when you have seen gas-based capacity utilization getting better, the distribution part which they had a lot of regulatory issues, that is getting resolved. So Torrent Power is one company which I believe that a lot of tailwinds are available for them in next couple of years, continues to do well in that.
Torrent distributes as well. It's a
Torrent is a distribution company
they're into generation and
so
distribution.
it's a very similar business model in that case, just like Tata Power and Reliance Infra in Bombay, or again the Tata Power and Reliance Infra in Delhi. It's the same business model. Ahmedabad, Surat, Gandhinagar, they have a cost plus kind of a model. Then they are also the distribution franchisee in Bhiwandi Circle and Agra Circle in Uttar Pradesh. So they are fairly big in distribution.
Some of the others like GVKJM, the problem is they have, even if this piece gets better, there's so much other trouble.
Exactly.
In general, so much overhang.
Yeah, exactly. So if you
want
look
a cleaner kind of play, right?
Exactly.
The
So if you look at that's what I refer to when you look at the balance sheet of many of these companies, you would have a momentary pop in these stocks. They could be up 20-30%, and then it just fades.
Torrent Power, which was the other? You said two names, right?
Yeah, the other name is GAIL, Gas Authority of India.
Okay.
So this is a company which is going to see a lot of momentum because of more gas being available and the transmission company which it is. Definitely that would be a very, very good thing for GAIL as well. So these are a couple of names which I think would be a great story to play as far as gas theme is concerned.
What about, let's get to roads.
Yeah. See, in roads we have our top pick as Ashoka Buildcon.
Okay.
We like that company. Also, we are positive on Sadbhav. So both these companies, we think that they are, like, we of course have a buy on PNC also, but in terms of our preference order, we definitely like Ashoka Buildcon and Sadbhav much more, because we think that these are the companies which are doing great in terms of their core business. They have been very, very sensible in their bidding when they do that for the projects, and also in terms of their execution, they are very, very cautious and circumspect when they execute these projects in terms of no excessive risk, no excessive balance sheet stretch. They don't do that.
You're talking about the 100 rupee name or the other one, the Sadbhav Engineering?
I'm talking about Sadbhav Infra. Sadbhav Infra Project, which is a road company.
Okay, fair enough.
So there are two companies. One is Sadbhav Engineering and one is Sadbhav Infra.
Okay, you're talking about Sadbhav Infra, which trades at 99 right now. Yeah, okay. Fair enough. So that's roads. Let's get to the GST bit. That's the other thing that plays around there.
So I think on GST, I think first the broad thing what would happen, like if you remember 20 years back, there used to be a lot of unorganized market for things like air conditioners. Even 10-15 years back, when you had to buy a desktop, you would
get it assembled.
You would have a lot of opportunity in terms of unorganized space. But that thing got changed. If you buy an AC today, there is a 99% chance that it would be a branded product.
Yes.
Same thing we are going to see in many of these products which are currently in unorganized space. So let's say if I look at air coolers. Air coolers today is still a significant part of that business is in unorganized sector. This is going to get better. If you have GST, I think the incentive for people to buy an unorganized project would be lesser and lesser. Over a 3 to 5 years time frame, we would see a significant increase in terms of what people buy in things like that in organized space. So
why would the incentive go down for unorganized?
Because the price differential would be much, much lesser. Because today you would see an organized space, there is, whether we like it or not, but there is a lot of price differential which is currently available. But if after GST, you would see that the prices of raw materials and the price which you are used to build that product are largely aligned. There would not be too much of differential which would be available for an unorganized company.
No, because the unorganized does not pay taxes right now.
Unorganized doesn't pay taxes, and the procurement also is not always in white. Some part of it is in black also.
But the point is, how will that change? The point is, GST will replace a current set of taxes, right?
Right.
But if somebody is outside the tax net, that is a separate subject.
No,
GST is not going to fix that.
See, I think if you GST, of course, I agree with you that GST will not fix that. But if you look at the entire value chain, let's say you have to move from point A to point Z. Now, at point B, point C, point D, everywhere the product is accounted. So somebody wants to buy that product at point F. It has to buy from point E only, and that point E guy has paid taxes on all that. So for him, it would not be possible to do any kind of tax evasion in that sense. So whenever you are in a value chain, when everybody has to pay taxes at each and every incremental step, it is very, very difficult to continue with the practices which we have in our unorganized space.
Okay, so Symphony then.
Symphony, like Symphony is a name which we like a lot. We think that it's a company which is very, very good even otherwise, but there is a lot of macro theme which will play out for that company, and this is a company.
Any others there? We've spoken to Symphony many times in the past. Any other areas?
See, I think in the organized space, it would be good for largely the consumer durables also. So you have examples like Hitachi, you have examples like IFB. These are the guys who would also benefit. But anything which is going to see a large shift in that is going to be Symphony, because air coolers is a market where we have a lot of unorganized presence even today.
Any other top ideas?
See, we also like Coal India a lot. We think that it's a story which is going to play out very, very well. And just take a step back and see what has changed for that. In last 5-7 years, the biggest problem for Coal India has been that there was not enough availability for evacuation of coal. So, like Coal India,
it wasn't producing.
It was producing. It could have produced much more, but definitely there was not enough capacity available for evacuation and transportation of that coal. If you look at what has changed in last 18 months, Coal India has been consistently delivering a production output of at least 7 to 8% kind of growth rate. This was 1 or 2% 3 years back or 5 years back. So this is going to continue. You are going to see a lot of these initiatives which are coming. Just last week, if I remember correctly, there was a tie-up between Coal India and Railways where they were buying 2,000 new wagons, and it would be enough to have 33 rakes, which would be almost 12 to 15% of the excess capacity which they would have. So one part is getting very, very good, which is related with transportation of coal. And secondly, even on the internal processes, I think there is a lot of energy which is there in the system. If you look at how the employee number is going down in terms of the overall strength which they have and more use of subcontracting capacity, I think that is something which would help internally also to ramp up production. At the same time, you can transport more. So I don't think that 10 to 12% kind of growth rate as far as production is concerned is very, very difficult for Coal India to achieve in next 3 to 5 years.
Fair enough. And maybe some price hikes along the way can help.
Yeah, price hike, I think that part is something which is going to get more stable now, because we have seen that in last 18 months, commodity price declined, it impact on imported coal prices as well. And because of that, you have seen that impact has come for Coal India as well on e-auction prices. But if e-auction prices are more stable and you are seeing a production ramp up and volumes are better, definitely the earnings can grow much faster.
You like JSW Energy as well?
Yeah, JSW.
We are out of time. I just wanted to put that stock out. I have to wrap up.
Yeah.
Pankaj, it's a real pleasure. Thank you very much for coming in. Pankaj Sharma, Executive Director, Head of Equities, Equirus Securities, there talking about his top bets. Thanks very much. Let's just take a very quick break. Thanks for staying with us all through the morning. What we're going to do is take a very quick commercial break. Have to do that. Back very quickly. And we'll have Hina taking you through the next 1 hour of trade from Delhi.